Chromium signals diverged this week. The UG2 benchmark fell by $1 to $285 per ton, while China mainport inventory fell to 4.830 million tons. Dispatches and arrivals also moved on different paths. The market is balancing a softer or cost reference against visible supply pressure. Start with price. The formal UG2 benchmark reached $285 per ton after it fell by $1 this week. It now sits at 25% of the 13-week range. The next formal assessment is still required to confirm whether this direction persists. Inventory is the counter-signal. China mainport stocks fell to 4.830 million tons, a weekly move of minus 0.266 million tons. The stock level is at 67.4% of its 13-week range. Inventory is a point-in-time stock measure, so it must be judged separately from shipping flow. Shipping stayed split. Confirmed origin dispatches were 0.432 million tons, 0.019 million tons lower than the prior period. Confirmed China arrivals were 0.454 million tons, 0.113 million tons higher than the prior period. Dispatches affect later voyage supply, while arrivals measure current inflow. They should not be mechanically netted. South African 40 to 42% chrome concentrate offer held at $285 per ton. A large South African supplier kept its latest 40 to 42% chrome concentrate offer at $285 per ton for shipment before October 15. The figure is an offer, not a confirmed transaction. The first transmission path is the event has an explainable link to a supply, logistics, cost or demand node in the chromium chain. Actual impact still requires confirmation from price, inventory, vessel or tender indicators. China's low and medium carbon ferrochrome imports fell to 76.75 tons in July. China imported 76.75 tons of low, medium and microcarbon ferrochrome in July 2026, down from 247.66 tons in June. The figures cover a small specialty segment rather than the full ferrochrome market. The first transmission path is the event has an explainable link to a supply, logistics, cost or demand node in the chromium chain. Actual impact still requires confirmation from price, inventory, vessel or tender indicators. Freight rates rose across several key routes amid shipping disruption. Disruption across key shipping routes was accompanied by higher freight rates and greater interest in alternative routes, with implications for voyage time and landed costs. The first transmission path is South African chrome or primarily reaches China by sea, making route and insurance changes relevant to freight cost and arrival timing. Actual delays still require confirmation from vessel schedules, rerouting, and freight data. Each event still needs confirmation from price, inventory, or physical flow data before it changes the market call. The weekly benchmark fell, while visible inventory fell. Dispatches of 0.432 million tons and arrivals of 0.454 million tons measure different stages and cannot be netted into the stock change. Customs trade data provide a macro backdrop, yet aggregate metal or imports are not a chromium demand measure. ChromeBrief therefore reads the week as a softer or cost reference alongside easing visible supply pressure. Next formal UG2 assessment will test whether this week's fell move continues. Friday's mainport inventory will show whether the current fell move extends or reverses. Confirmed dispatches and actual arrivals must then be compared with their own prior periods, not mechanically netted. Commodity-level customs data would provide a better demand check than aggregate metal or imports. This is ChromeBrief's weekly observation, built from formal price, inventory, and shipping records. We will test the current divergence again when the next benchmark, Friday inventory, and confirmed physical flow data are released.